Hi guys, it's Stock Curry, and in today's video I'm going to explain why the markets rose so much on Tuesday, whether or not I see this bullishness continuing, and I'm going to explain some of the major changes I see coming to the markets over the next 10 years. So let's get into it! The markets rose significantly on Tuesday, with the Nasdaq up over 2%, the S&P up over 1.5%, and the S&P finished above the 50% Fibonacci retracement level, which is extremely bullish. So why did the market rise, and will this bullishness continue? Well, first of all, we got to take a look at why the market rose, and whether it was news-based or if perhaps something else was going on. So let's go take a look at the news that came out today, and let's take a look at earnings and all of the things that may have moved the markets on Tuesday. The day got started with the International Monetary Fund cutting global growth forecasts by 0.8% for this year and 0.2% for next year. They have reduced their global GDP rate to 3.6% for the global economy. Now, that's significant because they had just lowered this rate in January, and now they're lowering their expectations again. So we can expect the global GDP growth to slow down significantly this year and next year. And this obviously is not going to be good for global economies or the stock market. So the first bit of news that came out on Tuesday was bad. So did the US 10-year Treasury yield drop? Maybe that could have been good for the markets. Well, no, actually it rose. It's up to 2.93%, closing in on 3%. It continues to rise. So if we got bad news and the Treasury yields continue to rise, why did the markets go up? Because it seems like they should have gone down. Well, maybe earnings were good. Let's go take a look at those. Bank earnings came out last week, and they were bad, with JP Morgan reporting a 42% decline in year-over-year revenue, and other banks showing declines as well. And Johnson & Johnson reported on Tuesday before the market opened, and not only did their revenue decline 17% quarter over quarter, on top of that, they lowered their year-end forecast, and on top of that, they stopped forecasting their global vaccines. Now, here's the thing. When a company stops forecasting, it means that either they literally have no clue what's going to happen, or more likely, they expect the forecast to be so bad, they just don't want to say it for fear of tanking the market, or specifically tanking their stock. And so they just won't give a forecast. And that's their way of kind of keeping that stock propped up a little bit longer. So the fact that they lowered their year-end guidance and stopped their COVID vaccine forecasts is really bad. And so the stock dropped 2% pre-market, as well as it should have. So earnings have been bad. Why did the stock market go up? Well, I think there's three reasons for the stock market rising on Tuesday. The first one is purely technical. If we take a look at the QQQ, which is a NASDAQ 100 ETF, you can see that we had a bounce off of the 23.6% Fibonacci level on Monday, which would point to some bullishness and a rise that should have happened on Tuesday. And an SPY, which is an S&P 500 ETF, we got the exact same thing, a bounce off of the 38.2% Fibonacci retracement level. So from a technical standpoint, it looks like stocks might have gone up today. But there had to have been more to it, because even if the technicals are bullish, they're not going to go up if the overall fundamentals are bad. So what else caused the market to go up? Well, I think a large portion of it is the fact that on Monday, it was tax day here in the United States. And last year, a lot of people made a lot of money, which means they had to pay a lot of taxes. I know I did, and like most people, I waited until the very last minute to pay taxes. I paid my taxes on Monday. There's no point in paying taxes any earlier than that because I want that money available to use it and grow it and make more money. So I wait till the very last second to pay taxes. So I paid my taxes on Monday along with everybody else. So now you get to Tuesday and everybody's paid their taxes, and now we're like, okay, cool. We know how much money we had to pay. We got that out of the way. Now we got a little bit of leftover extra money, and we can go ahead and put that into the stock market now that taxes are paid and we're done. So that is probably one of the biggest reasons the stock market went up on Tuesday, is all this excess capital that people have been setting aside for taxes. Once the taxes were paid, they took the remainder and put it back into the stock market. Now, there was a third reason why stocks went up on Tuesday, and that is the bond markets. as bond yields continue to rise, and they've gone up significantly over the past week, as bond yields continue to rise, that means that prices on bonds are dropping. So bond yields go up, prices go down. That's the way it works. It's an inverse. Now, if bond prices are going down, what does that really mean? Well, it means there's a lot of selling pressure in the bond markets. So there are more people selling bonds than buying bonds. Now, as all these people sell their bonds, they end up holding a large amount of cash. Well, where do they put their cash? Well, they don't want to hold it in cash because they're just going to lose it to inflation. They don't want to put it into real estate because all signs are very, very clear that we're about to have a major bubble burst in the real estate market. So where do you put it? Well, you got to put it in the stock market. There's no other place to put it. There's no alternative. And so that's where we get that acronym TINA or TINA. There is no alternative. So you have to put your money into the stock market if you're going to pull it out of the bond market right now. And keep in mind that the bond market is significantly larger than the stock market. So even a little bit of selling pressure in the bond market can cause massive buying pressure in the stock market. So the reason the stock market ran up so much on Tuesday was a combination of factors. It had to do with the fact that Monday was tax day, and now all the excess funds people put back into the stock market on Tuesday. It had to do with all of the selling pressure in the bond markets over the past week, and now that money is hitting the stock market. And it had to do with the fact that the technicals were pointing to some bullish action, so you had some day traders pushing up the market as well. Now, you combine that with the fact that the fundamentals, that is the earnings, the IMF, the treasury yields, all of the fundamentals are extremely bearish, and it looks like Tuesday's run-up was a blip. I'm going to call it a mistake, but it was a blip, something that may not last, as in we're probably going to get more downward pressure from here. And I'm not surprised to see Netflix completely bomb on earnings. Netflix had its first ever subscriber drop in like a decade. It was horrible. And Netflix stock was down 25% after hours. Now, this sent the stock market down after hours as well, with the NASDAQ down 1% after hours and the S&P down just under 0.5% after hours. So the Netflix dropping so much actually sent the stock market down because, like I said, earnings continue to be bad. And after our major run-up on Tuesday, which was more than likely just a one-day blip, we are getting back to the bearishness, which we should get to because earnings are bad. Now, whatever happens Wednesday, who knows? We're probably going to open red, obviously, because of Netflix. But what happens after that? I don't know. I would not be surprised to see the stock market recover and get back up to Tuesday's highs before the end of the day on Wednesday. And the reason for that is because of Tesla earnings. Tesla is reporting earnings after the close on Wednesday. And I do think a lot of people are going to be buying Tesla stock in expectation of Tesla having great earnings. Now, if Tesla misses earnings too, or if they provide a bad forecast because, I don't know, their Shanghai plant's been shut down for 2 weeks, that could be really bad. And that could really tank the markets on Thursday and Friday. So I don't know what's going to happen Wednesday. I wouldn't be surprised to see Tesla rise on Wednesday in expectation of good earnings, which in turn brings the whole stock market up on Wednesday. But if earnings are bad, whatever happens to Tesla earnings, that's going to determine what happens to the market on Thursday and Friday. So short term, it still comes down to earnings, but so far, earnings have been bad. Now, here's the thing. You may have seen some reports that 79% of companies who have reported so far have beat earnings. And that's true, and it sounds like a great number. But here's the thing, it's really not, for two reasons. Number one, earnings expectations are always set very low by companies. Companies will set very low expectations because they want to beat them. So in a good, healthy bull market, you can expect more than 85% of companies to beat expectations. Only 79% beat. Now that tells you that companies are really struggling to beat their already low expectations. And that's bad. That's actually really bearish. But it gets worse. The expectations that companies put out, their guidance, was already significantly reduced due to fears over inflation and supply chain shortages and all of this. So you had companies predicting a 45% drop in earnings, and they only dropped 42%. Ooh, they beat earnings. Yeah, it's still terrible. I mean, come on, 42% drop? That's horrible. So just because a company beats earnings expectations does not mean earnings are good. It could be earnings were bad, they just weren't terrible like they were predicted to be. So just keep that in mind, that beating expectations isn't necessarily a good thing. It could still mean the company had a horrible quarter. And the fact that only 79% are beating their already low expectations is even worse. So really, earnings have been really bad so far. We'll see if they can turn them around. Obviously, Tesla is going to be the big one Wednesday after the close. We'll see what happens. But so far, they have not been good. Okay, that is my short-term prediction. What is the long-term change that I see coming in the stock market over the next 10 years? Well, it's something that happens about once every 10 years. It happened in the year 2000. It happened in 2008, 2009, and now it looks like it's getting ready to happen once again. And I'm not just talking about a major recession. Yes, it is a major recession, and actually the recession is the trigger for it, but it's something much bigger than that. About once every 10 years, the stock market overall goes through a massive shift where the darlings of the stock market suddenly fall out of favor, and new stocks that people were kind of in obscurity, not a lot of people talked about, all of a sudden becomes darlings of the stock market. I'll give you some examples. Back in the year 1999 and 2000, there were a lot of dot-com companies that people thought were going to be the next great thing, the hottest stocks. Everybody was buying them up, and 80% of them went out of business. So that was a major shift in the stock market. We had companies like Enron, that everybody was buying Enron. It was like the best stock since sliced bread, and they're out of business. ExxonMobil was a massive one. Everybody was buying ExxonMobil. They had a great dividend. They were growing. It was a sure bet stock that you could just hold forever and retire on. And now nobody buys ExxonMobil. It's gone. It's out of favor. And now, today, we have stocks like Apple and Tesla and Amazon that are in favor. And believe it or not, and I know this is going to seem impossible for those of you who are just getting started in the market, but 10 years from now, there's a very good chance that Apple and Tesla are going to be low down in the list. That, they're going to be there. People are going to continue to buy them and trade them or whatever, but they're not going to be the big darlings they are today. They're not going to be the super mega cap stocks that everybody buys into and holds in their long-term portfolio forever. Things are going to change, and those stocks are going to fall out of favor, and they're going to get replaced by other stocks. So what I've noticed over decades in the stock market, since before I started trading, is the economy overall tends to go through shifts, and money tends to shift as far as where people invest. So if you go back like 100 years ago, there was a massive amount of money being poured into your manufacturing, your steel, your railroads. I mean, the steel companies were the darlings of the stock market back then, and everybody was buying the steel companies, buying manufacturing companies, buying railroad companies. I mean, that's where the money was. And as the economy changed and as the world changed, those stocks became less popular and they started to fall out of favor. And then, like I said, we had the dot-com bubble with all the tech stocks, and then those fell out of favor. And then we had the energy stocks, the Enrons and the ExxonMobils, and then those fell out of favor. And today, we've got the consumer stocks, the Apple, the Tesla, and one day, sometime in the next 10 years, those are going to fall out of favor. There will come a day when Tesla no longer has a 100 PE ratio. Once Tesla falls out of favor, I don't know when it's going to happen. It could happen a year from now, 5 years from now, 10 years from now. But once Tesla falls out of favor, that PE ratio is going to drop to 20. And the stock is probably going to drop in price to go along with it. Now, I get it. It seems impossible today. Like, that would never, ever happen. But I'm telling you, it happens all the time. About once every 10 years, we get this massive shift in the stock market. Well, look, it's been 10 years. And bear markets trigger massive shifts. Bear markets cause the darlings of the stock market to drop significantly, to get their PE ratios way down, and other stocks that are in obscurity that very few people talk about start rising to the top, and they become the big powerhouses 10 years from now. So just think that if you're buying Apple and you expect to hold it for 10 years and it's going to be your retirement stock, that may not actually be the case. I mean, just look at T-Mobile, or not T-Mobile, AT&T very recently. They cut their dividend and everybody sold it up and everyone was like, whoa, where'd that come from? Out of nowhere, right? And so things change. You've got to keep an eye on your long-term stocks and don't just think you're going to buy something, hold it forever. So where do I see the future going? What stocks, what industries do I think are going to be the future, say, 10 years from now? I think it's going to be a couple of things. I think as the world changes and we get more and more devices online, more banks online, I think we're going to have this major shift to a need for security. So I think anything dealing with online security, specifically the cybersecurity world, is going to be a major player in the next 10 years. So stocks like CrowdStrike and Palantir, I think, are going to be massive powerhouse stocks 10 years from now. And there's more than likely going to be some other cybersecurity company that hasn't even gotten started yet that's going to be a massive powerhouse in the future. Now, in addition to that, as we start getting into new ways of paying for goods and services, I think the companies that have things like Cash App and Venmo are going to be big major players in the future as well. So I think fintech is another industry that's going to be a major player in the future. Think SoFi, PayPal, Square, now Block. I think these are all going to be stocks that are major big-time players in the future. So those two industries. And then the third industry, which it's a little too early to invest in, is blockchain, not cryptocurrencies. I don't think cryptocurrencies themselves are going to be the big major thing in the future, but I think the blockchain will be. So if we end up with some new company startup that goes public and maybe they have a social media site that's on the blockchain and there's no filtering and they're not trying to ban people and all this stuff. And whatever is out there, and whatever you post, it's just total freedom of speech. I think something like that has a chance of really taking off and becoming really big in the future. We don't really have anything like that right now. And then whatever else blockchain related, maybe there's some security stocks that come out that use the blockchain to really boost and increase security. Maybe some of these fintech companies start using the blockchain to maybe process transactions a little bit faster than Swift does, or something like that. I think something with the blockchain is going to be big in the future, but I haven't highlighted, I can't find any companies that really stand out that would be major blockchain players in the future. I think that technology is still a little bit ways off, that it's going to come. I just don't think we're quite there yet. We're still a little bit early to invest in those types of companies. So cybersecurity, fintech, and blockchain. I think those three industries are going to be the big powerhouse industries in the future. I don't think it's going to be the consumer goods stocks like it is today. It's going to be the cybersecurity, fintech, blockchain. I think that is going to be the future for the market about 10 years from now. So keep your eyes out and keep in mind that bear markets are what trigger these rotations in the market. So it could very well be that over the next 2 years, I know this sounds crazy, you don't believe me, but it could very well be that over the next 2 years, Tesla and Apple fall out of favor and the stocks drop and people just stop investing in them. It could very well be that Tesla drops 80%. I know that sounds insane and crazy, but it could happen. I've seen it happen to so many stocks before that were big, major, mega cap companies that just fell out of favor. And that money could move into Palantir and CrowdStrike and SoFi and PayPal and Square and all these other companies. So keep your eyes out for some major shifts on the horizon. And if you're young and you're looking to build your long-term portfolio, start considering some stocks in the cybersecurity and fintech spaces rather than the stocks that are already huge boomer stocks that everybody's investing in. Don't go invest in those. Go invest some long-term money into some up-and-coming stocks, because that's where the long-term growth and the big money is going to be. All right, guys, I hope you enjoyed this video and got a lot out of it. I want to remind you that I'm going to a conference. I am actually leaving in a few hours to head out to the conference. So this is going to be my last video for this week. My next video is going to be next week on Monday. Hopefully Monday. It may not be till Tuesday, but I hope to get a video out for you guys for Monday. So I hope you guys have a lot of success trading over the next week. If you guys have any questions, you want to discuss stocks, options, crypto, whatever, come join us over in the Discord. I have a free Discord you can sign up for at STOCKCURRY.VIP/Discord. That's STOCKCURRY.VIP/Discord. And then you can also upgrade to VIP if you want my trade alerts and you want access to the coaches and all that sort of stuff. And I also wanted to remind you that Webull is still offering their best promotion ever this month, where you get 5 free stocks worth up to $9,600 when you open an account using my link in the description below and deposit just $1. So if you want to get 5 free stocks worth up to $9,600, just sign up for Webull using my link in the description below and deposit $1, and you'll get those 5 free stocks worth up to $9,600. And then, of course, if you're not a U.S. resident and you want to join us on the option trades and everything else we do, you can sign up for Interactive Brokers. Interactive Brokers offers options trading throughout the world, including in the UK. And I've got a link for that in the description as well. All right, guys, I hope you got a lot out of this video and enjoyed it. Don't forget to hit the like button and subscribe. And if you are on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I hope you guys have a lot of success trading, and I will see you on Monday, hopefully.